Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Archer Aviation Inc. Annual Report. Archer Aviation Inc. offers a range of innovative products and services that are revolutionizing the aviation industry. At its core, the company designs and develops electric vertical takeoff and landing (eVTOL) aircraft for use in urban air mobility (UAM). This cutting-edge technology enables efficient and environmentally friendly transportation within cities. In addition to eVTOL aircraft, Archer Aviation also provides direct-to-consumer aerial ride-share services. This means that individuals can book a ride on one of the company's aircraft, providing a convenient and exciting alternative to traditional modes of transportation. The company's product line is not limited to passenger services. It also offers maintenance and repair services for its aircraft, ensuring that they remain in top condition and are always ready for flight. Furthermore, Archer Aviation has developed Archer Direct, a commercial aircraft designed for various applications. Overall, Archer Aviation Inc. is a pioneering company that is pushing the boundaries of what is possible with aviation technology. Its innovative products and services are poised to transform the way we travel and transport goods in the years to come. Unfortunately, I do not have access to the text that was supposed to be provided. However, I can still provide a general essay on what might cause a stock price to drop. The stock price of Archer Aviation Inc. has dropped in the past year due to several factors. One major reason is the decline in investor confidence. When investors lose faith in a company's ability to generate revenue and profits, they tend to sell their shares, causing the stock price to plummet. Another factor that could have contributed to the drop in stock price is the company's financial performance. If Archer Aviation Inc. has reported lower than expected earnings or revenue growth, it may lead to a decline in investor confidence and a subsequent drop in stock price. Additionally, changes in market trends and industry conditions can also impact a company's stock price. If there are shifts in consumer demand or technological advancements that make the company's products or services less competitive, it could lead to a decrease in stock value. Lastly, external factors such as regulatory changes, economic downturns, or global events can also affect a company's stock price. These factors can be unpredictable and may not be directly related to the company's performance, but they can still have a significant impact on its stock value. Archer Aviation Inc. maintains a market capitalization of $5 billion, broadly in line with the industry peer group. Archer Aviation Inc. trades at a lower price-to-book ratio of 2.19 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 25% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of key factors. On the growth side, aircraft development, certification, and customer demand are crucial, page 9. Successful scaling of production to meet future demand is also essential for revenue growth, page 9. Additionally, receiving FAA airworthiness certificate and delivering test reports and certificates contribute significantly to revenue growth, page 13. Expansion into international markets and additional market segments, such as defense and logistics/cargo, can also drive revenue growth, page 14. Differentiating products and services from competitors through effective strategy and execution is another key driver of revenue growth, page 14. Notably, the sale of aircraft to United Airlines has been a significant contributor to revenue growth, page 78. On the decline side, uncertainty around financial viability of planned lines of business can lead to revenue decline, page 8. Potential increase in losses as operations expand and difficulty managing growth effectively also contribute to revenue decline, page 8. Rising insurance costs due to expansion into new markets and commercial eVTOL operations are another factor that can negatively impact revenue, page 8. In conclusion, the primary drivers of revenue growth or decline are largely influenced by factors such as aircraft development, certification, customer demand, market expansion, and effective strategy execution. The company's financial performance has shown a significant improvement in its ability to generate operating cash flow. In 2025, the company achieved a substantial positive operating cash flow of $1,796.4 million, indicating a strong and stable financial position. However, this is not consistent with the previous year, as the company experienced negative operating cash flow in 2024, ranging from -$82 million to -$820.4 million. This fluctuation highlights the importance of monitoring the company's financial performance over time to understand its underlying trends and stability. The company's debt level has experienced a significant increase over the past year. According to the financial reports, the total debt, net of current portion, rose from $64 million in 2024 to $79.5 million in 2025, representing an increase of $15.5 million. Furthermore, the total debt payable as of 2025 stands at $81.1 million. This substantial rise in debt level has led to a notable increase in interest expenses. While interest paid decreased by 68% from $2.5 million to $0.8 million, interest expenses actually increased from $0.1 million in 2024 to $4.2 million in 2025. This indicates that the company is now paying more in interest on its debt, despite a decrease in interest paid. Overall, these changes suggest that the company's financial situation has become more burdensome due to its increasing debt level and associated interest expenses. Management is expressing uncertainty about the company's future financial performance due to various challenges in scaling operations and meeting demand. However, they are confident in their strategy to develop advanced aviation technologies and aircraft, particularly eVTOL aircraft for air taxi operations globally. The company aims to inspire a passenger experience reminiscent of the golden age of aviation while reducing certification risk, development time, and cost through integration with leading aerospace suppliers. They have made significant progress in the third phase of certification program and expect to obtain production certificate from FAA shortly. Despite facing challenges, management is optimistic about the company's growth prospects, which depend on market development, regulatory approvals, and customer adoption. They plan to use cash for future development and expect to begin generating significant revenues after completing design, development, certification, and manufacturing ramp-up of aircraft. Management acknowledges that they may incur additional losses and higher operating expenses in the foreseeable future, but believes their existing cash will be sufficient to fund operations for at least the next 12 months. They are also exploring various financing options, including debt and equity issuances, to support their growth plans. The company's financial activities in recent times are worth noting. While the company has not paid dividends to its shareholders, it has been involved in share buybacks. This indicates that the company is focusing on retaining its earnings and reducing its outstanding shares rather than distributing profits to investors. In terms of specific transactions, the company issued a significant number of shares to Stellantis, totaling 24,038,192. Additionally, public warrants were exercised, resulting in an additional 3950 shares being added to the company's capital structure. These actions suggest that the company is actively managing its share count and may be looking to consolidate ownership or reduce its equity base. Concerns about inventory buildup and supply chain disruption are prevalent throughout the industry. One of the primary concerns is inventory buildup, as companies plan to stockpile parts and components for their aircraft. This can lead to a surplus of inventory, which may not be utilized efficiently. Supply chain disruptions pose another significant threat. The limited number of suppliers and service providers creates a vulnerability in the system. Companies are heavily reliant on third-party partners for parts and components, making them susceptible to supply chain disruptions. These disruptions can arise from various factors, including unanticipated problems in developing aircraft, political and macroeconomic conditions, public health threats, regulatory changes, and system failures. Furthermore, volatility in interest rates, inflation, and currency exchange rates adds another layer of complexity to the supply chain. This volatility can lead to supply chain disruptions, which may have a ripple effect on the entire industry. As a result, companies must be prepared to adapt to these challenges and develop strategies to mitigate the risks associated with inventory buildup and supply chain disruption. That concludes the financial summary for Archer Aviation Inc. Feel free to comment below, and I will be happy to answer them when possible.